We all work really hard for our money. But here's a question. Is our money working hard for us? In this explainer, we're going to break down a super simple yet powerful way to grow your savings, even if you're just starting small. Does this sound familiar? You're saving your money, you're doing the right thing. The number in your bank account is slowly ticking up, but it feels like you're not really getting anywhere. Well, if you feel like your money should be doing more for you, you're absolutely right. And you're not imagining things. Let's look at the story of a single 1,000 rupee note. On the left, you see what happens when it just sits in a savings account. Over time, because of inflation, the cost of everything going up, that 1,000 rupees actually buys you less. But on the right, that's a different story. When you invest it, your money is put to work, giving it the chance to grow, to actually beat inflation and become worth more. So, how do we get our money from that left column over to the right? Well, the solution is way simpler than you might think. It's called a systematic investment plan, or as everyone calls it, an SIP. Now, don't let the fancy names scare you. An SIP is basically just an automatic way to invest a set amount of money every single month. It goes into something called a mutual fund, which is just a big pool of money managed by professionals. Think of it like this. You're chipping in with a bunch of other people to buy into a whole basket of investments. It's basically investing on autopilot. I love this analogy because it's just so perfect, right? An SIP isn't just a place to park your cash. It's a smart piggy bank, one that takes the money you put in each month and gives it a job to do, the job of making you more money. This is where it gets really, really cool. How do these small, regular bits of savings actually turn into a big pile of cash? The secret sauce, the real magic here, is a little thing with a huge impact called compounding. You don't need a lot of money to get this magic working for you. Seriously, we're not talking about huge sums. For this example, let's just use 1,000 rupees a month. For a lot of us, that's less than we spend on coffees or going out. Now check out this timeline. After 5 years of putting in that $1,000 a month, you're seeing some nice steady growth. At 10 years, things are really picking up steam. But look at what happens at 15 and 20 years. The growth just explodes. That, my friends, is compounding in action. It's your money making money, and then that money starts making its own money. It's like a tiny snowball rolling down a hill, getting bigger and faster all the time. What does that snowball turn into? Well, after 20 years of just putting in $1,000 a month, you could potentially have over 10 lakh rupees. Now, it's super important to remember, this is just an example. It's based on an average return of 12% a year. Real returns can be higher or lower, of course. But wow, it really shows you the incredible power of sticking with it over time. So that potential is pretty amazing, right? But let's quickly break down exactly why SIPs are such a fantastic tool for, well, pretty much anyone looking to build a better financial future. Okay, let's run through the greatest hits. First, you can start small. We're talking as little as 500 rupees. Second, it builds discipline automatically. You set it and forget it, and you build a great saving habit. Third, it's flexible. Life changes, and you can usually increase, decrease, or even pause your payments. Fourth, that amazing power of compounding we just saw. And finally, and this is a big one, you don't have to stress about timing the market. By investing a little bit each month, you buy in at different prices, which averages things out. It's way less stressful. All right, so you're probably thinking, this sounds great, but how do I actually do it? Getting started is not complicated at all. Think of it like planting a tree. It all begins with a few simple steps. As easy as 1, 2, 3. First, you'll do a one-time thing called KYC, or Know Your Customer. It's just a basic ID check. Second, you choose a mutual fund that fits your goals. Are you saving for something long-term, short-term? There are tons of options. And third, you just set up the SIP online. You pick your amount, pick a date for the monthly investment, link your bank account, and that's it. You're done. Your money tree is officially planted. So let's just end with this one thought. Every single day, you go out there and you work hard for every rupee you earn. You trade your time, your skills, your energy for it. So the real question is, isn't it about time your money started returning the favor and working just as hard for you?